us, sir.
Good evening. I hope I'm audible and visible. So, in the previous session, we had started with the new chapter that is redemption of preferences. Today, we're going to continue with the discussion. We are almost done with it. We have just a little bit of, I think, two problems left from the ICA material. So we will finish it off and then we'll move on to the next chapter in today's class, if time permits. The time should permit. We don't have much left. So, yes. So we're done with the first question, second question, third one is also done. And fourth one was also done yesterday. We did similar question, one RTP question I made you do. And then we finished the fifth question as well yesterday. Sixth question. Okay, sixth one also we finished. Seventh is also done. So eighth one, this is also done. This was a nice question which we discussed yesterday. Ninth question. We have to discuss today. Yeah, it's ninth and 10th one. Two questions are left. Let's discuss 9 and 10 now. Okay, before we go to 9 and 10, let's just go back to section 55, which was discussed yesterday. So in section 55, there's one very important condition. That is, only fully paid shares can be redeemed. Only fully paid shares. So we can't redeem partly paid shares. What do you mean by fully paid shares? Fully paid shares means the face value of the share of each share must be completely paid by the shareholder if you can redeem those shares. Only then you can redeem those shares. So if you want to redeem some preference shares, in such case, compulsorily the face value of the shares must be completely paid by the shareholder. Only then we can redeem those shares. So now what if we have some partly paid shares, sir? Sir, if there is any partly paid share, what we do is we first convert them into fully paid. How do we convert them into fully paid? By making the final call. Whatever that money is pending, final call money is pending, that is asked for from the shareholder, and that entry is passed, and then we redeem it. So this is how we redeem partly paid shares. So let's do a question, very simple, very easy, nothing, just one additional entry for making that final call and receiving that final call money. All the other steps being the same, what we do in redemption, right? First passing the due entry, then following section 55, then making the payment, then if there is premium, writing of that premium to the profit and loss. So all that is the same. Every other step is same, except for one additional step, that is making the shares fully paid by making the call, whatever money is left to be received. So receiving that money and adjusted. Only one step is extra. So we'll do it through this question, very simple question. The balance sheet of XYZ Limited as at 31st December 2021 entered earlier includes the following information. 50,000 8% preference shares of rupees 100 each, 70 paid out, 35 lakhs. 1 lakh equity shares of rupees 100 each, fully paid up, 1 crore. Securities premium 5 lakhs, capital redemption reserve 20 lakhs, general reserve 50 lakhs, bank account is there 15 lakhs. Under the terms of their issue, the preference shares are redeemable on 31st March 22 at 5% premium. Okay. So the preference shares, we see preference shares over here, 35 lakhs. They have been redeemed at 5% premium. So what will be the total amount payable? 35 lakhs into 5%. Premium is 1,75,000. Total 36,75,000 will be payable. In order to finance the redemption, the company makes a rights issue of 50,000 equity shares of 100 each at 110 per share. You know what is a right issue? We have already discussed it under bonus issue and right issue unit, the previous unit. So right issue means issuing the shares at a lesser price to the existing shareholders, right? So making some fresh issue to the existing shareholders, not to anyone else, to the existing shareholders at a lesser price. Market price ಕಿಂತ ಸ್ವಲ್ಪ ಕಡಿಮೆಗೆ issue ಮಾಡೋದು. 20 being payable on application, 35 including premium on allotment, and the balance on 1st January 2023. Okay. The dates are important, slightly important over here. We'll read it again with importance to with giving importance to dates. The issue was fully subscribed and allotment made on 1st March 22. The money due on allotment were duly received by 31st March 22. The preference shares were redeemed after fulfilling the necessary conditions of Section 55 of the Companies Act 2013. Fine. You're required to pass, you're asked to pass the necessary journal entry. Ignore the date column. Okay. You're supposed to ignore the date column, but consider the dates because everything is not called. I'll read it again. Now, let's look at the question. So preferences are redeemable. Fine. On 31st March, we're redeeming the preferences. That is fine. 31st March 22. At 5% premium. In order to finance the redemption, the company makes a right issue 50,000 equity shares of 10 each, of 100 each at 110. That's 10 rupee premium we are collecting. 20 being payable on application, 35 including premium on allotment, and balance on 1st January 23. We don't have to pass the entry for this because only till redemption we will have to pass till 31st March 22. So I'll just stop at the allotment stage. The issue was fully subscribed at the allotment on 1st March 22. The money due on allotment were duly received by 31st March 22. So allotment was done by 31st March 22 of the right shares. So let's start very simple question. The preference shares were redeemed after fulfilling the necessary conditions of Section 55 of the Companies Act 2013. Right, let's begin. Let's do the journal entries. There's a working note, but that working note we will do later. So before I begin, I hope you remember Section 55, what we had discussed in the previous session. Section 55 said the whole motto or the whole ambition of Section 55 was to ensure that the capital base of the company stays intact, right? Even after redemption, the capital base of the company must be intact. It must be same. So that is what the motto of Section 55 was. How many options, how many ways can we keep it intact, and how many ways can we keep it intact? You can use the chat box. If you're listening to me on Zoom, can use the chat box and respond. So I was telling you how many ways in which we can keep the capital base intact as per Section 55. There are two options, two ways. The first one is to make the fresh issue of shares, and the second one is to keep the to utilize the reserves, free reserves, and create CRR, capital redemption reserve. So we have two ways in which the capital base can be kept intact by the company as per Section 55. Okay, now let's discuss about it in this question. So we are going to redeem these preferences, which is right now partly paid. There are 50,000 preferences which are partly paid. I can't go ahead with the redemption as it is, as mentioned earlier when I started this session today. I told you that I can't redeem partly paid shares. So we'll have to convert this into fully paid shares first, and then we will have to talk about redemption. So let's start with the journal entries first, and then we will talk about the redemption. One small working note is there, which we'll do at the end of it. In between the solution, we will go for the working note. Okay, journal entries in the books of XYZ Limited. Okay. First, we will do the right issue because the right issue is being done on uh, the dates are given here, right? 1st March 22. So let's finish the right issue and then we will go for the redemption related adjustments. Okay. First, we have to collect the application money. It's like normal issue of shares because there's application stage, there is allotment stage, there is call stage. So total 110 we are collecting, 100 towards face value, 10 towards premium, right? So 110 is the price. Shares of rupees 100 each at 110 per share. So the issue price is 110. We will have three stages over here. The total face value should be 100. The total premium must be 10. The total issue price must be 110. 20 being paid on application. No premium at application stage. Allotment stage, we have 35 rupees, including premium. So the 10 rupee premium is being collected at allotment stage. Out of 35, 10 rupees is towards premium. Then remaining 25 will be towards the face value. And whatever the balance is left is at call stage. So 110 minus 20 minus 35, which is 55 rupees. And all this is towards the face value itself because premium has already been collected. So total 110 rupees is being collected like this in three phases. So bank account debit. We are not going to account for the call stage because the call stage is done later after the 31st of March. We have to do only till this March. Allotment stage ತನಕ ಮಾತ್ರ ಮಾಡಿದ್ರೆ ಆಯ್ತು ಈ right issue with entry. So bank account debit to equity share. Right shares are equity shares, right? So equity share application account. Application account. The total money will be how many shares am I issuing? We are issuing 50,000 equity shares. 20 rupees is application money. So 20 into 50,000 equity shares, which will be 10 lakhs. I hope you remember these entries. These are issue related entries, issue of shares related entries, being application money collected. Next is transfer this money to the capital. I'm not writing the dates, although I can write the dates. The dates have been given in the question, but I'm not writing it because I've said ignore the date column. So I'm ignoring it. Through equity share capital. Everything is towards the face value, so everything will be transferred to the capital account. 10 lakhs. Being application money transferred to capital. Okay, next we will do the allotment stage also for these shares, 50,000 shares. So first due entry, equity share allotment account debit. This premium at allotment stage, we're collecting 10 rupees towards premium. So to equity share capital, to securities premium. 35 rupees is the allotment money, 35,000, 35 into 50,000. And that 25 rupees is towards the face value, 10 rupees is towards the premium. This is 35 into 25,000 is, sorry, 35 into 50,000 is 17 lakh 50,000. Is the total money due at allotment stage for those right shares. It's just passing normal journal entries for issue of shares, right shares here. Doesn't matter if it's right or not right. So it is just the issue of shares, right? To the existing shareholders. That's why we call it as a right issue or right shares. Being allotment money due. Being allotment money due. Now pass the next entry, which is receipt entry. Bank account debit to equity share allotment account. Which will be 17 lakh 50,000. Being allotment money this week. Okay. Next up, we are now going for the call stage because before that, when the redemption is happening, call is happening on 1st January 23, but the redemption is happening on 31st March 22. So I'm not going till the call stage. Let's next go for the redemption of the preferences. Now, as I mentioned, the problem to redeem these preferences is uh, one CRR and all we will create, that will be done. But the problem is the shares are not fully paid, right? Shares are not fully paid yet. It's partly paid shares. Out of 100 rupees, only 70 is paid out. So we will first have to make the call for the final call money, and then we will have to redeem those shares. We will receive that money, and then we will have to repay the shares. For a simple reason, because as per section 55, I cannot redeem preferences which are partly paid. So now let's do the call. This is preferential final call. So first I'm passing the due entry for preferential final call. Debit to what preferentials are these? 8% preferential capital. 8% preferential capital account. What is the amount which is not yet called? Out of 100, 70 is called. So 30 is not yet called. So 30 rupees 30 into how many preferentials do we have? 50,000. So 30 into 50,000, 15 lakhs. 15 lakhs is the final call money being final call on preferences due. Next, receive this money. Being final call money received. Remember, this is preference shares, not the continuation of the right shares. Don't get confused. The first part was relating to the right shares, right? Where we had to receive the application money, we transferred it to capital, then we received then we passed the due for allotment money, which had securities premium in it, and then we received that allotment money. We did not do the final call for those shares because the final call is due in the next year, not this year, in the next year. So I did not do the final call for those equity shares. Those are right shares, those are equity shares. Now we came back to the redemption point, right? We have to redeem the preference shares on this question. So to redeem the preference shares, we have to make it fully paid. For that, for the preference shares, I am making the final call. I hope there's no confusion over here. You're very clear as to what we are doing. So we are doing the final call relating to the preferences, 50,000 preferences, 30 rupees. Final call money is due and we receive it. Now, sorry, this is not due, this is received, right? This entry is for received. Now let's go on to the redemption of the preferences. So let's pass the entry for redemption. The entry is due entry for redemption. What is the due entry for redemption? 8% preference share capital. We are repaying the capital, so we are reversing the capital, we are reducing the capital. To reduce the capital, I have to debit the capital account, so I'm doing that. It is, see, total 35 lakhs was there so far because only 70 rupees was paid up. The other 30 rupees also I've asked now, which is 15 lakhs, 13 to 50,000. Total 100 paid up now it is. So it will have a balance of 50 lakhs now. I hope that's clear. Already we had 35 lakh balance in preferential capital account. Now 15 lakh has been additionally credited when we asked for the final call. So total balance, closing balance in share capital is 50 lakhs, which is being repaid now. We are redeeming the preferentials, so that's why I'm debiting it. Then we have premium. Oh, the premium will be calculated on this, okay, 50 lakhs. I think earlier I calculated on 35 lakhs, but you have to calculate on this, right? So premium is how much? 5%. So 50 lakhs into 5%. Premium is 5%, no? Yes, at 5% premium. So this will be 2,50,000. This will be payable to the preferential holders. So to preferential holders account. 52 lakh 50,000 being redemption of 50,000 fully paid preference shares announced. Okay, now comes the important part of the question. I can't directly pay this 52 lakh 50,000. This much amount is to be paid to the preferential holders. I can't pay it directly now. First, I have to comply with the provisions of Section 55. What is Section 55? Section 55 says that the capital base of the company must be the same. So for this, as I discussed earlier, I have two options. I can either make a fresh issue or I can create CRR. So in this question, they have done a fresh issue, right? They've done a fresh issue of equity shares. So I don't have to create all of it as CRR. I have to see how much CRR to be created. So now what we will do is leave space for three journal entries. Okay, one is for or other two journal entries. One is for CRR creation, and the other one is for payment of the preferential money. That 52 lakh 50,000 payment entry. So for that, leave two journal entry space and do the working of it. Working note, calculation of amount required in CRR. First, face value of preferential redeemed. What is the face value of the preferential redeemed? 100 into 50,000, 50 lakhs. Now, very important, pay proper attention. We've done an issue, right? We've done a fresh issue of shares to the existing shareholders only waited, but we've done a fresh issue. How many shares we had issued? We had issued 50,000 shares of 100 rupees at 110. Now remember, we are going to take only the face value over here, okay? Because capital should replace capital. Premium collect now considered Madudalla. We should consider only the face value portion. And even only the face value portion which has been received so far, which is so far due and received. So only the proceeds towards face value from the fresh issue is to be considered. So what I'm trying to tell you was, although we have issued 50,000 equity shares at 110 rupees, I can't say that I have done a fresh issue of 50,000 shares into 110. Two mistakes when you do that. One, the capital should replace capital. So you can't consider that 10 rupees premium. So that's out. And you can't consider the whole of 100 rupees also because you've not received the 100 rupees fully before the redemption. Redemption is the munche ನಾನು full 100 rupees receive ಮಾಡಲಿಲ್ಲ. ನಾನು ಇಲ್ಲಿ ತನಕ receive ಮಾಡಿದ್ದು only this much, only till the allotment stage. The final call is being made in the next year. So the allotment stage ತನಕ ಮಾತ್ರ ನಾನು receive ಮಾಡಿರೋದು. So that is why for fulfilling this conditions as per section 55, I will have to consider only this much, which is the face value received towards those fresh shares which was issued. So here, fresh issue of shares. How much is the face value I have received? I have received 45 rupees. 45 into 50,000. 22 lakh 50,000. I hope you have understood this. For the sake of section 55, I will have to I have two options there. One to do the fresh issue. We've done the fresh issue, but we've not collected the whole of the face value. So the capital should replace capital, right? So far, capital has been credited. See this, see the entries, it will be more clear over here. The capital has been credited with the 10 lakhs over here, equity share capital with 10 lakhs over here, and 12 lakh 50,000 over here. So 20 rupees towards application and 25 rupees towards the face value at the allotment stage has been credited to the share capital. So we'll consider only that portion for section 55. Therefore, CRR required is 27 lakh 50,000. So this is how we are going to replace the capital, which is being redeemed. 50 lakhs capital is being redeemed. So in that 22 lakh 50,000 new capital has come into the business, and remaining 27 lakh 50,000 CRR will be created. So let's create the CRR. The fresh issue entries have already been passed. So just creation of CRR now. They've not given what reserves. Oh, they have given what reserves we have. Let's see what reserves we have for CRR creation. The general reserve, there is one. Okay. General reserve is there. Let's use the general reserve. So there is already a CRR. Can we consider that 20 lakhs? No, no. That was for earlier some redemption they had done. They had created that 20 lakh CRR. That is not to be considered for this one. For this one, we are going to consider only, I mean, we have to do the fresh CRR. From the general reserve, we will do free reserve in the market. We have general reserve. So I'm going to take it, debit it, and credit it to CRR income. 27 lakh 50,000. As per section 55 of the Companies Act. 2013. Okay. Then pass the last entry. What is the last entry we will have to pass? We will have to make the payment, right? I'll connect the screen, but you can pass the last entry. What is the last entry? We will have to make the payment of the amount to the preference shareholders. 52 lakh 50,000 is payable, right? So preference shareholders account debit to bank account 52 lakh 50,000. Okay. So that's it. We have one more question, which is forfeiture of the shares. I'll just read the question. I think you can try it on your own. The continuation of this question only, question number 10, the last question in your ICI material. Yes. I hope you have passed the last entry. What is the last entry? The last entry is to make the payment, as I told you, which is preference shareholders account debit. ₹52 lakh 50,000 being payment due to preference shareholders made. Okay. Here we finish this question. So in this question, what was important was one, write issue entries, issue of shares, very simple entries. You can have a look later, you'll understand. In stages they have done, application stage, allotment stage, so issue entries. And then the second part, which is important, which according to me is significant, is this working note. You should understand why I did it. To satisfy the conditions as per section 55, I will have to do this. Next up. Okay. Illustration 10, this is the last question, the last illustration question in the ICA material. So let's see what it says. With the help of the details in illustration 9, which we already did, above and further assuming that preference shareholders holding 2,000 shares failed to make the payment for the final call made under the section 55. So it made that final call, right? 30 rupees was due in the previous question. Only out of 100 rupees, only 70 was received. 30 was yet to be received from the shareholders. So we made the final call because we can't redeem partly paid shares. We have to redeem fully paid shares. So to make them fully paid, I first made the final call and then I redeem the shares. So now they're saying here, what if when you made the final call, 2,000 shareholders holding 2,000 shares failed to make the payment for the final call? What happens then? You are asked to pass the necessary journal entries and show the relevant extracts from the balance sheet as of 31st March 22 with the corresponding figures as of 31st March 21. Assuming that the shares in default are forfeited after giving proper notices. So in this case, what will you do? So we have asked the balance sheet, but the solution does not have the balance sheet. So I'll just explain as per the solution given in the institute's particular itself. So what happens in that case? We have to forfeit those 2,000 shares and then we will have to redeem all the other shares. So we will be left with 48,000 shares to be redeemed. So those 48,000 out of 50,000 shares, 2,000 shares will be cancelled and the remaining 48,000 shares will be redeemed. So I'll just go through the entries over here itself. It's fairly simple, just that forfeiture entry is there for 48,000 shares. So now see this final call, preferential final call money was due. So on 50,000 shares, so 30 rupees into 50,000 shares, due entry is passed. In that, on 2,000 shares, I'm not receiving the final call. So only on 48,000 shares, I'm receiving the final call. So I received the money. Then remaining, I transfer to calls in arrears. So I closed the final call account. 15 lakh rupees is credited to the final call and closed. Calls in arrears, there's an optional entry. You don't have to transfer it to calls in arrears. You can just keep it like that during final call also. We've seen that in forfeiture of shares. We already discussed how that works. So next, preferential capital account debit, 2 lakhs. This is for cancelling those 2,000 shares. So to cancel the 2,000 shares because they did not pay the final call money, so we are forfeiting. So to forfeit the shares, again, something that we have already discussed. Preferential capital account is debited with the face value called up. So it's fully called up shares. Earlier, it was partly called up over here. Only 70 rupees was called up. But then we made the call for the remaining 30 rupees as well. So it becomes fully called up. So 100 into 2,000, 2 lakhs. Calls in arrears, the amount which is not received. We had kept it as an asset, calls in arrears. Now we are closing that asset also. That call scenario's account is also being closed because you will not receive that money any further. You're not going to receive that money. Canceling the shares. And two shares forfeited. Forfeited shares account, we are crediting the forfeited gain. So 70 rupees is the forfeited gain. So we are crediting it to the forfeited shares account. Simple forfeiture entry, 2000 shares have been forfeited. Next, this is relating to those right shares. Bank account debit to equity share application. This is for the right shares, 50,000 right shares were there. The same entries which were passed for the previous question. The same thing at the chart and all. So the same thing over here also. Application money is received, 50,000 into 20 rupees. 10 lakhs transferred to share capital, fine. This entry also we passed earlier. Equity share allotment account, this is the new entry for allotment. So in allotment, we had 10 rupees premium. So for that premium, we credited the security premium account, received the allotment. Then CRR, okay, then they went to redemption. So this is the new entry for redemption. So this now we're going to not going to redeem all the shares, preference shares, because out of 50,000 shares, 2,000 shares have been cancelled already. So 48,000 shares will be redeemed at 110, 100 rupees towards face value, 10 rupees towards the premium. So as you can see over here, 48,000 preference shares will be redeemed. Why only 48,000? Because out of 50,000 shares, 2,000 shares will forfeited, right? So 48,000 into 100. So the capital, the face value portion is 100, 48 lakhs. Then we have 5 rupees, 5% is the premium. So you can just do 48 lakhs into 5%. This is the premium, 2,40,000. The 110 rupees, 48,000 shares into 110 rupees is the total amount payable to the preference shareholders. So 110 into 48,000. Sorry, not 110, 105, right? 5% of the premium, not 5. 48,000 into 105. 50 lakh, 40,000 is payable to them. Simple. Next, the CRR has to be created. Now, for creation of CRR, the calculation will go like this. So, face value required or face value redeemed. How much face value is redeemed to preference shares? 48 lakhs. Sorry, face value redeemed is 48 lakhs. In this, the right issue, the fresh shares, face value of fresh shares. How much is the face value of the fresh shares that we have received so far? 20 rupees and 25 rupees, right? 20 towards application, 25 face value towards allotment on 50,000 equity shares, the right issue shares. The same thing, what we done earlier. 45 into 50,000, 22 lakh 50,000. So this much fresh issue is done. Section 48, option 1, this is. Section 55, option 1, this is. So the balance out of 48 lakhs, fresh issue is for 22 lakh 50,000. So the remaining 25 lakh 50,000 will have to be through CRR. You will have to create CRR for the remaining portion of 25 lakh 50,000. You can see over here, this is the CRR creation entry, 25 lakh 50,000. For transfer of CRR, the amount not covered by the proceeds of fresh issue of equity shares. So 48 lakhs is the total amount redeemed. In that, 10 lakhs is towards the application that we had received on those equity shares, and 12 lakh 50,000 is on the allotment. Anyway, you don't concentrate on that, you concentrate on this calculation. It's simple, right? So you should just minus the face value received of the shares so far. Then the payment entry for the shareholders. So you have to make the payment, and one more entry is to write off the premium. That's all. This entry is not required because the shares have not been reissued. We transfer it to capital reserve only when the shares are reissued. In this case, it's not reissued, so you don't have to pass it. Even in the previous problem, pass the right of entry of premium. I forgot to tell you that. One right of entry is there, no? Write that also. Which is premium or redemption account will be debited to P&L account if it's not the general reserve. I don't see the P&L account over here, so I'm writing it off the general. In the previous, this one it was 2,50,000. This one entry of the rider. That's it. Being premium on redemption return. All right, so this is the redemption of preference shares. We're done with all the questions, all the 10 illustration problems from the ICA material I have done for you. All the 10 questions we have discussed in the class. So you can redo it once more. All of these 10 questions are very important for the exams. Any of this can come for your attempt as well. It's easy, especially the questions which I did today have special importance. Ninth one and 10th one. You see it peacefully, calmly, you will understand. It's simple. The concepts are simple. It's what we have discussed in yesterday's class, right? If you understand section 45, redemption of preference shares is very easy. Right. I will stop here. We'll start the new chapter later. We have finished till here. I finished the redemption of preference shares. We have one more unit to go in company accounts, which is redemption of debentures, which we will do later in another class. Thank you so much. Good evening.